Good afternoon, everyone. Dear friends, thank you so much for joining to BFSI live session on the budget. I must say, finally, the big day, which is a budget day, is here. The Finance Minister Nirmala Sitharaman has presented a budget in the Parliament, and the first reaction that we are getting from all the people is this is an inclusive budget. This will take India forward, and this will actually add to the growth story of India. That's the first reaction that we have been receiving from the corporates India Inc. Of course, there are some up and downs in the market and specifically Sensex, but we have been receiving great reviews about the budget. But of course, when the papers will be out, we'll get into the minor details and we'll try to avoid the confusion with you also, which most of the people are trying to understand with the tax slabs whether they should go with the new regime or not. But if you look at largely, the government has focused on large infrastructure plans, built up the capex cycle plan, and also given a roadmap for the fiscal deficit plan as well. And in fact, the finance minister kind of focused on 2 3 areas, including the new business models like millet, also the infrastructure projects and reskilling and digital and so many things. In fact, the finance minister has spoken about. When it comes to the banking and finance, there are some specific suggestions or the recommendations in terms of changing some norms for the banking and regulation, using PAN as a sole identity, and also availing tax exemption for the financial products with the old regime if they don't want to go to the the new regime are some of the major changes. But we'll decode more and try to unleash the potential of budget with the top speakers that I have with me, and allow me to introduce them to you. My first speaker for this particular panel discussion is Mr. Rakesh Singh, the MD and CEO of Aditya Birla Finance. Rakesh ji, glad to have you.
Thank you. Thank you, and good afternoon, Amol, and good afternoon, everyone.
Thank you. My next speaker is Mr. Rajiv Yadav, the MD and CEO of FinCare Small Finance Bank. Rajiv ji, glad to have you.
Thank you, Amol. My pleasure. Good afternoon to everyone.
Thank you. My next speaker is Mr. Tarun Chugh, MD and CEO of Bajaj Alliance Life Insurance. Tarun ji, glad to have you.
Amol, thanks for having me on this. It's always great to be on ET.
Thank you. Thank you so much. We will also have Suresh Agarwal, the MD and CEO of Kotak General Insurance, very soon. We also supposed to have actually Radhika Rao from the DBS, but unfortunately, due to some technical reasons, she's unable to join with us. And I think Suresh Agarwal is already here. Suresh, glad to have you.
Thank you, Amol. Nice having me here.
Thank you. So let's begin, gentlemen. My first question to all of you is a very, very common and a basic question. How do you rate budget? How do you see budget? What is your first reaction on the budget? And Rajuji, I will start with you.
I think Amol, you kicked it off well. The way I think about it is that the budget should ultimately focus on a few simple things, but put a deep focus on that. And principally, as you rightly said, one is focus on the growth of the country, and which should bring phenomenal good to the larger population. The second aspect is obviously risk management. Given the fact that we are just coming out of a COVID crisis, we are seeing global recession, we are seeing a higher interest rate cycle. So there has to be a larger focus on deficit, expenditure, the nature of the expenditure. So that's the second focus item which the budget typically has to focus on. And once you get the broad items right, let's say the focus is on capex, which is a long-term investment which converts into direct and indirect jobs, out there, and long-term gains to the economy and productivities of various sectors of the economy. Then you sort of started moving that in the right direction. The details can be can be infinite, but as a direction, the budget's focus towards capex is phenomenal. The second thing that we look at from an infrastructure perspective is digital infrastructure and how it changes the economy. We have seen that over the last 10 years and how digital can make truly India a forward-looking country. So investment towards that. And then a lot of the public actions in terms of health, education, and we bring this whole thing together. And when we can see it, it becomes a forward, a growth-looking budget. And that's what the country needed in such difficult times as it comes out of various crises, the COVID and the economic crisis which followed after that.
Well, certainly, without even giving gigantic reliefs, I think they have managed many things, specifically on the infrastructure side and the new initiatives such as reskilling and digital. Rakeshji, let me take your views and the opening remarks on the same.
No, so Amol, I completely agree with Rajiv in terms of it's a pre-growth It's a pro-growth budget with a strong push on the capex outlays. Clearly, there's a focus on the green growth to spur environmental conscious lifestyle, which we are all looking for and targeting. It's an inclusive development through targeted schemes towards farmers and rural economy. It is pro middle class because there has been some revision in the personal income tax that will leave money in the hands of the middle class, and that should help consumption to go up. Then there is a towards MSME segment, there is a MSME credit guarantee which has been created, 9,000 crores, which starts effective 1st April. So that's again is a very good news, especially for people like us who are involved in funding and financing the MSME segment. So clearly, it's a balance. The short term and the long term clearly balances prudence with prudence. If you look at, I think, fiscal deficit prudence, which can be seen for the next year, the target is 5.9% of fiscal deficit. So it really balances out a lot of future looking investments, which also government has this the skilling infrastructure. If you look at the agri credit gets a boost. For the housing, again, housing segment has got a boost, and that really helps big employment generation, the real estate and the housing segment. The outlet for PM Awas Yojana, it has been enhanced by 66% to 79,000 odd crores. Also, the last one, ease of doing business. As you had mentioned in your opening remarks, PAN becomes a identifier in terms of our documentation. Clearly, more than 39,000 compliances, which has been mentioned by the finance minister, has been reduced. And clearly, so that should help in terms of building businesses, starting businesses, and ease of doing business. So I think it's a very well balanced budget with keeping a focus on the current environment and also building the infrastructure, and both the digital infrastructure and the physical infrastructure in the long term. So it's a very, very balanced budget, Amol.
Sure. So I think we will also be joined by a lot of readers and our viewers of ETBFSI, because we are live on all the social media platforms: LinkedIn, Facebook, Twitter, and Facebook as and YouTube as well. So those who have any specific questions can also raise their questions. I will try my best to take all those questions with the speakers that we have. I copied you, Rajivji and Rakeshji. Now, Tarunji and Sureshji, I will come to you. Maybe you will have a little different view here, and I will start with you, Tarunji. The government has actually increased the tax exemption limit to 7 lakh, but the exemption factor can go away, is what we are learning from the market if people want to go to the new regime, which perhaps will not be very, very beneficial for the insurance segment. So, first of all, how do you read the budget for your sector, Tarunji?
Yeah. Samol, it's an interesting budget from various aspects. Uh, See, what one thing we have to understand is that insurance sector being part of the economy, whatever benefits the economy, pretty much the insurance sector will gain as well. I think that's the first basic objective behind the budget. It is a budget which is in the favor of the middle class, farmers, and trying to make ease of doing business, promoting a lot of things around KYC, uh, a multiplier effect that will come from the capex that is going to be spent. I think that is going to help the overall GDP growth in any case. And usually, the growth of the sector, it's a life sector, life insurance sector, is linked to that. So from that overall foundation, I think we are gainers as everybody else is. But yes, there have been two bits that have been a little bit of a dampener, and we are kind of still evaluating as of now. One is, you're right, the lure of ATC will possibly go away, because ATC benefits were available in the earlier tax regime, and in the new tax regime, there is no ATC benefit. So I think that is the new tax regime being now more attractive a lot of this ATC benefit will go away from all the people who were on the old regime. And most were on the old regime. The new regime takeoff wasn't very high earlier. So that is very clearly one impact. The other is, of course, we're looking at details where there is the exemption of tax for traditional plans above 5 lakh premium. This just came out uh, uh, in the details as we saw. We're still trying to go through the fine prints and see the impact. Will impact the growth of the HNI, the high net worth individual investment in the insurance sector. Uh, at first glance, this may be hitting a little bit of our growth, but having said that, overall, it is a very positive budget.
Sure, Tarunji. I think there is some issue with maybe Sureshji, and I think uh, maybe I will have to, take him a little later. Once he joins, I will shoot my question to him. So let me go back to the conversation and keep the ball rolling. So Rajivji, let me come back to you now. Considering the capex cycle, which is up by almost 33%, that is the layout that the government has planned, and giving the boost to the MSME sector, what kind of credit growth do you see going forward? I mean, the credit growth is already up, but what kind of boost do you see as a banker to the credit economy going forward?
So, as you rightly said, Amol, the banks have been enjoying one of the higher credit growth phases over the last 6-9 months. And we all realize that credit growth ultimately comes from either a good capital expenditure increase, both on the private sector and the public sector, and also it comes from increased consumer spending by consumers. Now, on both these aspects, so the capex investment of the government will percolate down directly and indirectly, and which will ultimately get funded by the financial sector and the banks at that, and therefore credit growth should get the incremental boost or maintain a relatively higher growth position the way it is at this point of time. On the consumption side, partly one of the some of the benefits of the of a lower taxation for the middle class is obviously to to lay or to give out greater cash in the hands of the consumers, and therefore that increases the propensity of making additional personal consumption, which is either done by cash or it is propelled by credit along with it. So I think from both aspects, there would be a support for credit growth. Obviously, we cannot quantify it in terms of what is the percentage change. But given the fact that we have all come through lower credit growth in the COVID phase, there was a pent-up demand which is now showing up as credit growth with this incremental investments in both the directions of capex and personal consumption. I think it's going to support credit growth for the next couple of years as we should expect it to be.
Sure. Rakeshji, 2 points. One is specifically on the Retail Awas Yojana, where 79,000 crores fund has been allotted. I think that scheme has always been a successful one because a lot of housing companies and specifically lending into this space got a big benefit. I know you are into a different segment altogether, but again, broadly, if we think at how important this aspect is, because government is pushing at least one part of lending very aggressively under their Awas scheme. That is one. And do you also see now a greater pickup on the MSME side, because government is not only just trying to push the MSME sector, but also adding new segments like millets or the green energy. So basically, kind of encouraging new businesses to come.
No, completely, Amol. And if you look at the housing side, the PM Awas Yojana has been there for some time. Government has been pushing for housing for all. And yes, the COVID has taken some impact on that front. But clearly, the focus has been on the housing. And that really is a multiplier investment. If you see a lot of lower income people, they get benefit on the because of the subsidies, PM Awas Yojana, and the subsidies which they get, and also the real estate sector, which is the one of the highest employer or job creation sector, I think that really will provide jobs to the skilled and unskilled laborers. And so I think there will be a lot of I think the job and also the benefit on the housing side is created. Also, your second question, if you look at yesterday's economic survey which came, and uh, as per that, the Indian economy is expected to grow at 7%. Clearly, that means it's a fastest growing economy in the world, and that really means that the credit growth will be needed. Uh, and the capex, which you mentioned, 33% enhancement in the up to 10 lakh crores. Also the 50 airports, the aviation, the investment in the aviation or the airports, which has been announced in this budget, 2.4 lakh crores for the railways. And I think if you look at railways, is a big investment and big change which is happening in the railways also. And what that means is that it will percolate down to the MSMEs, SMEs, and the mid corporate and large corporate, because the work will be done across all different levels of the organizations. So clearly, it will spur the job creation. It will spur the demand, the work in the economy, and with focus on MSME. Because if you remember last time also when we had this discussion, we said the MSME segment should be supported for the next 1 or 2 years, because this was a segment which got impacted the worst during COVID. Though they have come out of it, most of them have come out, most of the sectors have come out of it, but still I think they need support for the next, because MSME is the backbone of any economy. One third of India's GDP comes from this segment. So clearly, we see a big push, big support with this 9,000 crores of corpus, which has been created as a credit guarantee for MSME. And this is just a guarantee. And over this, the banks and the NBFCs and everyone can lend to these MSMEs. So I think it has a multiplier effect in that way. So we see a big opportunity with stabilizing of the MSME segment, that the opportunity on the credit side will come up, I think, immensely. Also, if you look at Amol, the government has been creating digital assets like OKN, which is there, ONDC, which is coming, Open Network, on the digital commerce, which is coming in. And this will provide one of the limitations for a banking sector or for anyone to lend to MSMEs was formalized cash flows or authentic statements. I think that will be mitigated once the MSMEs gets registered on these portals. They supply, they buy. You will have a lot of alternate data which will be available, which will help lenders and institutions to lend to these MSMEs. And one of the big change has already been through the GST. So lenders use GST as an alternate source. If you don't have the balance sheet of the MSME, through the GST, you can assess the turnover, the income of the customers, and you can lend to them. So I think this all this support which is coming to the MSME and to the infrastructure and the housing sector, I think this will spur the demand in the MSME sector. And we are quite enthused in terms of so that we can participate in terms of providing credit to this segment.
Sure, Rakesh. In fact, on a softer note, my inbox is almost full with the NBFC reactions. Whether it's all the large companies specifically are sending tons of reactions. Good to have those positivity from that side. But Tarunji, let me come back to you now. And you're still very softer side. Maybe you will take some time to analyze the impact of what has the government done in the budget. But give me a broader view. Why is it that the government perhaps has not taken insurance very aggressively or diligently to the next level? At one side, they have increased the FDI cap, one after the other. But when it comes to the tax exemptions for the insurance, there was no relief. It was earlier added to ATC, and though the life insurance industry or even the health insurance, general insurance councils kept on expecting some exemptions there, it never happened. In fact, one of the very bold reaction that I just received from Mr. Nilesh Sate, who was the former member of IRDA, said that this is the washout budget for the insurance segment specifically. What is your view? Why the government is not looking at insurance that aggressively, which they should have?
I think that would be if I might say, a very harsh representation of that the government is unfriendly to the insurance sector. See, I very clearly, and I go back to the basics. Uh, the insurance sector usually grows by 1.5 times the GDP.
Yes.
And if you look at the data now, 20% of household financial savings is with the insurance sector. It's far bigger than a lot many other equity investment related
Absolutely.
sectors. Uh, so there has been support. Now, I think maybe we are running ahead of the expectations that we've uh, or maybe we've not been able to convince the government to give us more and more tax rebates, because sometimes in other countries, investing for longer term, investing more for risk,
Mhm.
usually requires some kind of a extra tax benefit. You see that in various parts of the globe. You see it in developed countries. You see it in developing countries, and I think the government at this point is very clearly focusing on insurance to go up for middle class, and actually to go up in the lower segments of customers. And in terms of taxation parity for high net worth individuals, they've kind of tried to neutralize that. That's what I can see very clearly from an investment and an insurance perspective. Now, we'll have various tools available for us. Now, today, for example, upwards of 5 lakh new business premium, the way it seems, and like I said, we're looking at the details still. The way it seems currently is that there may not be any 1010D benefit
Hmm.
above 5 lakhs. But the point is, bulk of business is done below 5 lakhs, and that's a bulk of 5 lakhs of premium, right? So that's a big part of our segment, and particularly for a company like Bajaj Allianz Life, it is a very relevant segment. It is a segment which is there in tier two, tier three, and largely a bulk of the tier one towns as well. And There, they, I think, trying to neutralize the benefits that are available to various other asset classes. And that I don't blame the government on that. I think they would rather have a more level playing field. I'm sure everybody else pitches in for benefits. And what the government has otherwise done is rationalizing the personal income tax. I think that has not
Right.
been mentioned on this panel at all. But I think rationalizing the personal income tax itself will give a boost to consumption, will give a boost to household savings. The moment that happens, we are a direct beneficiary of that,
Hmm.
because we have about 20% of the entire household savings. So I think
Right.
that will come in. We could, of course, keep hoping for more and more, and we will keep trying with the government for giving us more benefit, maybe in lowering GST when it comes to risk products, maybe looking at uh, a better regime on the annuities and the pension taxation. And that, I think, is an endeavor that we'll have to keep pursuing. But the way things stand, uh, we are going to gain from the growth of the GDP in any case.
Hmm. I'm sure on that part, because people will have more money in their hands specifically, and perhaps they will have choices to make whether to buy insurance or maybe look for their own schemes. So valid points there, Tarunji. Rajuji, let me come back to you. And there are some changes which is proposed. Again, I mean, we will have to look at the papers in detail and what exactly government wants. But kind of briefly, they told us, told in the session that Banking Regulation Act, RBI Act amended. There will be some changes or something like that, and also the KYC norms will be, simplified further. How do you read it? What do you see there?
So, so we'll have to obviously read the details. Very difficult to comment on this, but one of the points which was talked about in the speech was about archaic laws being reviewed and the structured process of reviewing them and seeing whether they're relevant and can we simplify them. Also, opinions being sought from the public and from regulatory entities on some of those actions. So, or some of the older ones or the newer ones, which are the newer ones was always happening, but I guess the review of the older policies and guidelines was not a regular activity. So I think it goes in the direction of which was mentioned earlier of making it business friendly, simplifying our regulations, and thereby enhancing the productivity of the business community at large. So I would say some of these acts are really old acts. They were enacted, decades, if not century back, and clearly some of those things need a review, and clearly some of them can be probably modified or dropped completely. So I think it's positive from financial services sector. Also, the finance minister had indicated, the process of doing it and everything else. So I think I see it as a good review and a simplification process for the future, and it should benefit us all.
Certainly. Rakesh, there is a talk about a lot of green initiatives, and the government has obviously set a deadline of 2070 for a net zero, and I think we can see a lot of projects happening, whether the hydrogen projects or the new green initiatives. Government has announced a lot in that direction. What do you think? How in fact, the battery storage will be supported with viability gap funding, 35,000 crore of energy transition, and net zero carbon emission kind of announcements which the finance minister have made. How do you see lenders will react to it? Do you see henceforth? I am obviously aware that you are from NBFC, not from banks, but since you are a lender, just trying to get your perspective. Do you see that the large lenders or maybe lenders specifically will look at green finance as a one of the important initiative going forward?
Yes, Amol, I think we are all in NBFC also. We are looking at ESG in terms of what we are doing, how are we supporting, what is our way of acquiring or supporting the clean energy initiatives and the businesses. So clearly, we are looking at the opportunities, and it doesn't end there only. In terms of, if you look at it, extends to the green buildings, residential complexes, commercial complexes, which is getting, how as a lender we can incentivize these, and how do we really see the benefits being passed on to the green projects. I also heard that the electric vehicles will be cheaper. So I think these are the initiative in the right direction. We as lenders, yes, it happens more in a bank, but as an NBFC also, if you have to be really look at your governance and compliance levels, we ourselves are looking at ESG and how, what is our scorecard on the ESG, to clearly focused in terms of clean tech. What can we do? How do we support the different green initiatives which the government is taking? And there is a big push from the government which is coming, and it should help. It can be helped by the banking industry and all of us in terms of really supporting these initiatives taken by the government. So clearly, we are looking at areas of where we can really play our role and support the businesses which supports the green energy.
Sure, quite meaningful thoughts there, Rakeshji, and even Rajuji on that part, specifically on the banking one. Uh, Tarunji, in fact, there are two, three questions specifically for you. We partly covered that. People at largely want to understand what is going to be the impact on their policies. So something like new tax regime doesn't talk about ATC benefit. Do we foresee this as an impact to insurance or ELSS business in long term? This question was by Rahul Chaurasia. In case you want to add something to it, if you partly discussed that earlier, but you want to take that, Tarunji, I will take the other
Sure,
question
sure,
with
sure, sure.
yeah.
So see, anybody who's already invested in life insurance, there is zero impact.
Hmm.
Anything that is coming in this law is very clearly saying is beyond 1st of April 2023. So hence, people who have existing policies should rest in peace. All benefits are there. The good thing about an insurance contract is it depends on when in which time it originated, and it does not depend on whether the premiums you're putting in the future are in a different tax regime, because it holds good in the tax regime in which it came in. So till I think it's a great time till 1st of April, and you'll only see insurance business going up uh, for the next 2 quarters, for the next 2 months, very clearly. Uh, Post that, of course, the new premium coming in, we'll have to see how the benefit of ATC starts impacting, if at all. Last year, we had some discussion about the fact that there will be impact because of the ULIP taxation above 2.5 lakhs. We honestly didn't see much of an impact.
Hmm.
Similarly, in terms of product structures, there'll be enough and more available where we can take benefit of uh, taxation up to 5 lakhs of premium. And that's bulk of the, like I said, middle class. Uh, It'll also push us to set up more infrastructure in tier 2, 3, and 4 towns. And I think that's where the government is kind of directing us to take more and more of our business. Upwards of 5 lakhs, it's all tax neutral to all financial services.
Hmm. Sure. Adding to that, how do you see the overall maybe cycle from the next year? Again, the option is there, Tarunji, in terms of if people wants to shift to the old regime, they can. But going ahead, do you see that the people will now look at insurance, not on the government part, but on the people's part, because we still have not a huge penetration, but those who are looking at insurance, do you think that people will now look at insurance as a insurance product and not a tax or a saving product?
I think that already started, Amol,
Hmm.
around the COVID period. As you know, that suddenly insurance came in as a very critical part of everybody's portfolio. We saw how term plans, which were not really picking up earlier, came up. There have been product innovation around other risk classes. If I might put from life insurance, some of the risk we handle is the risk of living longer, which honestly, if you ask me, is not talked enough. For example, your provident fund just about gives you enough to as an immediate pot of gold, which usually gets spent in most customers that I've seen. Hence, your second income or your income post 60 is really the pension side, and I think that remains intact. The risk of living longer, where Indian population is actually now moving up, upwards of 60, we have pretty much more than the US population sitting in India. So that bit very clearly is still going to benefit a whole lot. Uh, yes, term covers will pick up more and more, not because of anything to do with tax, but
Right.
because of COVID having passed us. And like I said, post COVID, there is interest in term, and also because our processes will are getting more clearer and clearer. Most people are wanting to get into insurance, but may not be able to add insurance because it becomes a lengthier process because of medicals, because of frequently asked questions that keep coming from the reinsurer side. I think now that big issue, the juggernaut of COVID is behind us, I think India particularly has navigated that very well. And unlike most economies which are really suffering from not maybe having overspent during COVID and then meeting their own fiscal deficits, the entire
Correct.
prudence that the government has shown will come up in the multipliers, and that will benefit. And usually, the as people tend to rather the economy, the GDP per capita tends to go up. You do see people putting money aside for more and more risk buckets. So overall, for the medium and long term, I think it is positive.
Sure, noted your points, Tarunji. Rajivji, I have a very important question specifically on the new segment. It's a very old segment, but the government has been keeping a huge focus on it. Is tourism, and specifically now, if you look at the SMEs, MSMEs, and new businesses are also evolving in and around tourism. The government has specifically said that there is a large potential for tourism, and specifically youth in particular. So they are working on a mission tourism, and with states participation, they will try to launch a lot of projects over there. When you look at the business, how big that is an opportunity for a lender like you, because if the new businesses appears, then there will be a demand from the there will be a obviously borrowing demand also for this particular sector, because this is a very huge sector. So how do you see the development of tourism sector, and do you see opportunities in this sector as a lender?
So Amol, as we all know that small finance bank, our loans are directed to more retail customers, which is in this particular case, are largely MSMEs, and they're actually micro SMEs, and but they are obviously employed, or they are sort of doing businesses which are of varied kinds. So the way I see it is that there are a lot of places that we operate, and we operate pretty much out of 21 states at this point of time, where our customers are focused on the specific activities which are specific to the place that we operate. So there are some cities which are very tourism friendly, which are religious cities, and therefore there are inflow of tourists. And as you also agree that tourism, obviously, when you encourage tourism and you build in the infrastructure for tourism, both at a center and a state level, you are at a larger context first encouraging domestic tourism, because there's so much potential for doing that. And obviously, there's a second element of international tourism coming into India. So the way I see it is, in the specific pockets that we have, which are more tourism oriented, what the bank can directly do is, create a segment of micro SMEs, which are focused in that sector, and then as a specific product for that, for those set of customers, by looking at the underwriting need differently, by looking at the opportunity differently, we can extend greater, credit in that direction. So I, largely, see the benefit of the government's focus on the MSME sector. One or two specific points that were already said on this panel, and in the larger context of how the COVID was handled and how the credit guarantee schemes were launched, the various support which is offered by the government. I think the MSME, which is the driver of the India's economy, is clearly the focus of the government, and through various schemes, through various digitization schemes, through payment schemes, through the QR codes and the UPI solutions, the merchant schemes, there is a lot of productivity enhancements which are happening in the sector, and the government's continued focus on the MSE sector directly by funding it through various schemes, or indirectly by supporting various industries, is clearly a welcome move. A bank like ourselves will clearly identify the specific segments of our customers which are attached to those industries, and we'll build a greater specialization in terms of technology, underwriting, sourcing those kind of customers for our bank. But we see it as a boon for small finance banks, which are largely working with the micro SME segment as a primary segment.
Sure. Agree, Rajivji. So I think we are almost close to our, the watch has already started ticking. But I will take one quick question with all of you, starting, from it's almost to the similar what I started with. It's the common question again, which is quite similar to the first question. I mean, we discuss a lot of things about your sector, and specifically, large view, broad view about the budget. But do you see now this budget will take India forward, considering and given the background of the G20 and whole world's attention, and the greater responsibility with greater hope that the world is looking at India? So how do you rate this budget, and whether this budget will take India forward? Is my common question to all of you. Rakesh, I will start with you.
So, Amol, if you look at the budget as we started, I think it's a very, very balanced budget. It really balances the short term needs of the economy and building the country in the long term. As the finance minister also said, that at 100, India should be a developed country, and that's what the government has been driving. So, it's a balancing the two aspects, the short term and the long term. If you look at, it's a very, very inclusive and development budget which is there. It's trying to reach the last mile consumer or the users, whether it's the middle income or the MSMEs and all. And big push, the capex push which you're seeing is infrastructure and big investments in the urban development, in terms of aviation, which is there. So clearly unleashing the potential of India. I think that's how we see it. That's how I see this budget as, and clearly addressing the current needs that yes, the country has to grow, and it is one of the fastest growing economy, a large economy in the world. So clearly keeping the growth momentum on and parallelly building for the long term. So clearly that's what the focus has been. The focus has been on the youth.
Correct.
Focus has been on the agriculture. So it's quite diversified and trying to reach the last mile. So that's how. So it's a very, very
Right.
balanced budget, Amol.
Sure. Tarunji?
I think India is in a very unique situation. Most countries have been responding on knee jerk reactions. It's almost like caught in front of a speeding car with headlights on in a blind alley. That's what how most countries have behaved in the last 2 to 3 years. It's just been swinging to either side.
Right.
I think this budget only just shows that we're working very systematically. We're working with a balanced head. We're working with, I think Rakesh is exactly use the right word, balanced everything. There's I don't see there's any nook and corner where this budget has not touched. Whether it's startups, you saw something on startups, you saw something on ease of doing business, things that we've been talking about. Tourism, I didn't expect that there'll be so much micro thought around each of these aspects. Every practical area, every practical customer segment has been looked at. Personal taxation has been such a, I'd say, surprise element, a positive surprise element, um, and hence boosting consumption. At the same time, the government is willing to spend as well. And as the tax receipts have gone up over the last year, overall, although as the finance minister said, she's letting go of 35,000 crores in tax benefits.
Right.
I think she's pretty confident of being able to balance a fiscal deficit under 6% at 5.9%. I don't think anybody would have imagined that a developing country like ours would be able to, kind of stick to these kind of numbers. At the same time, giving support to the states. We're talking of guarantees to the states. We're talking of how states can promote a lot many things around the unity malls. You heard, for example, selling each other's products. A lot of detailed thought has been given, a very balanced head, and I think this is exactly the kind of thought we require when India is in the climb that it is on. Uh, but for the taxation on insurance, I would have given it a near 10 on 10. I'd give it an 8.5 on 10.
Oh, that's really nice, Tarunji. Rajivji?
Pretty much, I equal the thoughts of Rakesh and Tarun. A budget which focuses on capex as a larger category for building out the future growth, a sustainable growth for the country. A budget which focuses on maintaining good fiscal discipline and having a glide path to better numbers. a budget focusing on financial inclusion as one of the larger goals, health, education as one of the larger goals, and a budget focus on the largest working class in the country, which are the micro SME segments out there. So when you bring this whole thing together, and instead of tinkering lots of minor details, but bring these 5 or 6 themes out and drive good execution around these themes and achieve good outcomes, which lead to sustainable growth of the country. And we should remember we are sitting in the context where India is the largest, is one of the fastest growing countries among the larger economies out there. And when you look at the world growth estimates for 2023 as a calendar year, India has been the fastest growing in 2022 and is expected to grow faster in 2023 and 2024. So the onus of maintaining a growth rate, even in such difficult times, is on all the citizens of the country and the government. So in these circumstances, to be able to balance out these contradictory pressures and still achieve fair outcomes would be one of the standing hallmarks of the budget and some of the execution which goes behind it.
Sure. Noted your points, Rajivji. I still have a couple of questions, and few more people have a lot of people have still tuned into this session, and I wish I could have taken many of their questions as well. But I think there are some irrelevant questions also. Few people also wants to know what's the future of Adani stocks, which unfortunately we can't take this on this panel, or neither we can give them some tips about the stocks. But great to listen to you, Rakeshji, Rajivji, and Tarunji, and thank you so much, dear readers and viewers, for tuning into this session this afternoon and listening to us very patiently. So thank you once again, Rakeshji, Rajivji, and Tarunji, for the remarkable insights that you shared here. Unfortunately, we couldn't have Sureshji. I think he was struggling with the network, but I wish he could have, and maybe we could have some insights from him as well. But thank you so much for tuning into this session.
Thanks, Amol. Thanks,
Thank you.
Rajiv. Thanks, Tarun. Bye.
Thank you.
Bye, everyone. Thank you.
Bye. Thank you.